Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, January the 12th, 2022. First, my apologies for the lateness in getting this update published, but I needed to spend some time on an emergency situation. Hopefully that's all been cleared up. And here is today's update. The market actually started off well, jumped higher, then sold off and came back, but ended up just moving more sideways than putting additional points into the rally. So nothing really has changed in terms of analysis. And then I'm continuing to look at it as a minor third wave up. But again, as I continue to discuss, this is what I would expect from the market, that it needs to pick up and go. So what I've done so far is thinking that I'm still within the first wave one of three, and that possibly this is where it ended. And now we're doing a wave two. And the reason I say that is because we did have solid rally, then we had a decent rally, and then over, in Globex, our initially great start, but right up until that 10 o'clock hour, and then boom, we started to come off, and then we sank pretty deep and came all the way back. So in the structure itself, a third wave, yes, one of three, two of three, still playing around in that two of three. That I can deal with, but the market needs to continue as a third wave and not spend a whole lot of time waffling around this 15,880 area up to 15,900. It got itself up to above 16,000, but not that far. Early in the session, it got up to 16,009.25. But in actuality, in my mind, I needed to see it up even higher before it started to pull back. But at 16,000, I'll take it. But I'm still now going to consider this just as wave one of three. So this would all be wave two of three. And whether it's complete here or whether this is the A, the B, and we're just waffling, absolutely hugging the Fibonacci support and resistance at 15,880. Now, continued weakness would still leave us with a three-wave structure up. And again, it broke to 16,000. So if it were to end here and we now start getting weakness, that break zone or the line continues to be at 15,734. If it breaks below 734, then my expectation would be it's going to pick up steam. So to break below that, it's going to have to first break below the 200-day moving average on the 30-minute chart. If I take this out to the hourly chart, let's take a look to see where the moving averages come in here. And so we're connecting the dots. That's going to come out too well. So let me pull it open from here and see what I get. Right. So right now it is below the 200. So it's actually just waffling below it. But we have the 20 up next, and the 20 is sitting at 15,877, and we're dropping through that. So next up, we have the hourly 50, and that's at 15,794. But that's all above 15,734, excuse me. And so a break of the 50, in my mind, almost guarantees, and that, but there aren't any, but it truly should lead to a break below the no break zone, or the no break line, which again is 15,734. And if it does that, I'm definitely looking then for a move below 15,152. And I still can be this intermediate fourth wave. So this, I know there was probably an extension here that things can be moved, but it's likely just continuing to, or this is an ABC, this is an ABC X, and we get an additional ABC. So there's several interpretations from current levels as to why it could break below 15,152. And should it do that, then we're looking at possibility of 14,410-ish. There are spots in between, but that would be on the larger scale. That would be where intermediate wave 4 would be equal to 0.382 pullback. So that would be what I would consider to be next in line. So a lot is on the line. So this is what I'm looking at here. I'm looking at what the market does. The weakness and just the sideways activity, I'm going to chalk that up to blowbacks and waiting for Europe to open. I think that things will kick into gear one way or the other. Again, upside, it needs to go. I suppose we have to allow for a test of the 50. And again, this previous low is also at the exact same spot, 15,797. So a new low below that. So they challenge the 50, but come back above. But if that were to occur, that coming back above has got to go. That this is done. Buyers are back, similar to what we have seen. Similar to what we have seen. So it started off well, but then bubble got caught. In any case, that's the picture. So even overnight, if we start to break here, and by the time we get in, it's back up here, good. Put in that 1, 2, go. 1 of 3, 2 of 3, go. 3 of 3, it needs to launch. Okay, that's that scenario. Downside, if it breaks 15,794, then we're really looking at it for it to go and likely break 15,734, which is that line. That's where wave 1 ended. So this, even if this is 3 and it's a 4, 4 can't overlap 1. So there are a lot of violations there. And that's where it would get left as 3 waves up. If it breaks that, okay? So that's the setup. If we're coming down and we break below the 50 and sail through 15,734, expect the market to quickly retrace these levels, break, and start heading below that. From current levels, we're talking a 700-point drop. But at this stage, it's almost where we're at a make or break. So it's like if people are hedging whether they're going to sell, if they really start to sell, they're going to join the party. That would be my take. So the technical picture is sitting right at a level it needs to exceed to give support to the upside. If it can't, it's going to give support to the downside. And then the further breakdown to the downside will bring in more pressure. So in other words, if it breaks below the 50, that's going to bring in more pressure. If it breaks below that 734 line, it's going to bring in more pressure. That's where I call for acceleration, and that's the pressure. The pressure is to find the bid. So the market will start chasing where it perceives value or where value was previously. So there are different things that we look at technically to see. And that's what I'm talking about, that if it breaks there, that was the last area of value, then it opens this door and you can see in between, there isn't anything. It's all black hole. I have to go very much further to the left to find that bigger picture of where all of this could go. Now, I'm just really carrying on here, so I don't want to do that. And make this any longer because it's late as it is. But just taking a peek at the 4-hour chart, see the come back down, I would say ABC, and this is an X, and we could end up here. And again, you can see it's been a very long time. I'm now going past November since we've been below 15,000. In fact, we'd have to go back to October, and that's the exact same line where the previous fourth is. So this fourth, yeah, that's why the 382 is right there. If indeed I can still, so this is the gig, folks. If it declines, it's really okay. The fourth wave is just still in gear. It just it needed more time and more space in order to do it. It still can be a double ABC, or it's still now, yeah, it could be a double. That's an ABC, and then we got an X, and we do another ABC. So it's there. And Elliott-wise, it fits. This would find support at the terminus of the fourth wave of one lesser degree. There it is. There's the support. There's where we'd be going. And we're going to get clues of that if it breaks below 8, what did I say, 34. 24, 34, whatever that was. Whatever that no break. 34. Okay, I'm going to leave it there. And just stay focused on the market. Get your mindset, block out the noise. It's price action, it's moving averages, it's technical. Next update will be on Thursday, the 13th of January.